This is Daniela Camboni for Kitco News, and as promised last week, we have a brand new show here on Kitco.com. It's called For Pete's Sake, and it stars Kitco's very own Peter Hug. Peter, so nice to be with you again today.
Thank you. Nice to see you again.
So, Peter, I know you've been in this business for close to 40 years, right? So let's talk a little bit about what we're seeing today. Really, the market's being down, and you alluded to this last week. What could be the reasons behind this?
Well, I think the reasons that caused the market to sell off last week are similar today. I mean, the European issues are creating nervousness and panic with the stock markets in Europe. It's sort of shifting over to the U.S. markets. People are moving into cash, and gold and silver tend to be liquid metals and tend to be sold when you need to raise cash.
So at these prices, Peter, what should people be doing? How should they be reacting?
Well, I mean, I think it's a great opportunity. You know, if you're a trader, technically, if you're a trader and you know what you're doing, you should have been more or less short this market for the past 3 months. The technical bands on the metals markets suggested that the market was overbought. If you're one of the people in a camp that believe the world is coming to an end financially and you need precious metals to sustain yourself when the eventual collapse of fiat currency occurs, this is great. I mean, if you bought it at $1,900, you should be thrilled. You can now buy it at $1,550. If you're an individual that is buying gold as an insurance policy as part of your portfolio, you should also be thrilled. I mean, the problem with that is that most people or most analysts tell people to buy 10% or 5% of their holdings in precious metals. What they fail to tell them is it needs to be recalibrated. So if, you know, the market drops in precious metals, what you should be doing at these levels is you should recalibrate your portfolio, and if the precious metals holdings in your portfolio are less than 10%, you add more to it. Vice versa, if the precious metals markets go higher and your weighting in gold is higher than 10%, you liquidate part of that asset to bring your portfolio back into the calibration that you were looking at. That's
a really good point, Peter. And also offline, I asked you, could it be possible that gold could hit that $1,500 mark? But you told me, well, it could also go the opposite and just hit $1,600 in a snap.
Yeah, I mean, I think what the problem is that everybody just assumes that the Europeans are going to stick with their austerity measures. And, Merkel in Germany just lost another election. The Greeks don't have it together. I mean, they're totally against austerity. My bet would be that the Europeans are going to follow the U.S. example and probably inflate their economies and sort of back off on the austerity, and I think that would be very, very positive for the metals.
Okay, let's look at the Greece situation, though. Could that really cause a reversal for gold?
It depends. I mean, I think a lot of it is already in the market. I love the Greeks. I've got a lot of my good friends are Greek, but they export ouzo. I mean, it's not a significant economy. If it breaks up quickly and it has ramifications to the Spanish and Portuguese banks, I think there could be an issue. But if they do it in an orderly fashion, I think Europe can survive without Greece and the euro.
They export ouzo. I'm sure your friend will be giving you an email there today, Peter. Thanks so much for that rundown. We'll see you again next week.
Thanks,
For Pete's sake, thanks for joining us.